Good morning, everybody. Welcome to today's conference. Today we're going to be talking about fraud, specifically in QuickBooks. My name is Sean Doughton. I am an audit partner with Dannible and McKee. I am also the partner in charge of our forensic team here at Dannible and McKee. And with me is Christine Patrone. I'm proud to say one of our newest certified forensic examiners. And she is also in charge of our accounting and advisory services department. She's a director there. So we're going to get going. We're going to talk about QuickBooks. So lately, with a lot of our fraud that has come through, we've seen a ton come through with small businesses that are using QuickBooks. So we really thought it was important to get out to a lot of people, some setups that you guys should be doing to really safeguard your assets and make sure your QuickBooks are set up properly. So again, make sure you guys download the IO Conference app. It came up in your Zoom. If there's any problems, put it in chat. We have a couple of people standing by that will be able to assist you with any of that help that you may need. Okay, so let's get to our presentation. There's the QR code. So our learning objectives today, we're going to talk about some red flags. We're going to talk about some common fraud schemes that are facilitated specifically through QuickBooks. Obviously, fraud happens through different general ledger packages, but today we're going to focus on QuickBooks. We're going to talk about how the employees are exploiting your systems features and the weaknesses that most companies we see have. Key reports that can help reveal potential fraud to any of the owners or CFOs. Some really powerful internal controls every organization should implement, regardless if you're using QuickBooks or not. Best practices for configuring QuickBooks, and then how to structure user roles and permissions effectively, and then using audit trails. So as I said, I oversee the forensic department in our firm. I utilize Christine and her team. Christine is an expert in QuickBooks. So anytime I have a client that's using QuickBooks, she is my go-to person. So we're going to learn a lot today from her. She helps me dramatically. So we're going to go through the first slides pretty fast, but we have to begin with what is fraud. So fraud is really a criminal deception intended to result in financial or personal gain. So if you have a knowing misrepresentation of the truth of a material fact to induce another to act to his or her detriment, that's what fraud is. So if you lie to deprive a person or an organization of their money or property, you're committing fraud. So here's our poll question number 1. What percent of employees could become perpetrators of fraud if the situation was right? So you're going to get another 35 seconds to answer the question. So then we'll talk about this. So A is going to be 20%, B is going to be 5%, C 10%, or D 80%. Last few seconds to answer. Again, you need to make sure you're answering at least 3 of the 4 poll questions if you want CE credit. Okay. 20% was the highest. 80% was the second. So there's the 10-80-10 rule. So 10% of your employees will never commit a fraud regardless of the situation. 80% of your employees could become perpetrators if the situation was right. And 10% of your employees are basically dishonest and would steal regardless. So 90% of your employees could become perpetrators. That's why we're having these seminars. And that's why we, in our firm, do so many forensic exams, because it's just so prevalent out there. So 90% of people could become perpetrators. So we're going to talk about making sure we have safeguards, really good controls put in place that is going to help prevent, at least hopefully a majority of this. So we always go through the fraud triangle. So obviously you need to make sure that you have opportunity, Usually there's financial pressure, and then there's rationalization of the fraud. And we'll go through this in a little more detail. So opportunity. So internal controls, we're going to talk significantly about this. None in place, none enforced, it's not monitored, or it's not effective. So you could have the most amazing internal controls documented, but if you don't actually do those controls, then they're not effective. Segregation of duties is another big piece we're going to talk about, and too much trust. 98% of the frauds I've done, I hear it all the time from the owners after we've uncovered it. I always trusted them, every single time. So financial pressure, debt, greed, lifestyle needs, life pressures, illicit activities, vices, gambling, drugs. Those are all some financial pressures that are going to lead to someone to start potentially embezzling. Rationalization. We see this all the time too. I don't get paid what I'm worth. Everyone else is doing it. They deserve to lose money. I intend to pay it back. And this is really where it starts too. So we see in a lot of people we've interviewed, it starts out really small. They stole $40. I just needed gas money. And then they got away with it. They were going to put it back, but they didn't. Nobody caught it. Next week, they take $100. And then that continues. It becomes significant. Nobody will miss the money. Another thing I just recently heard from a client was a controller was writing distribution checks to the owner and was like, oh, it must be nice to get those kind of checks. So that's another rationalization. Why are the owners getting this kind of money and I'm not? So 6 most common behavioral red flags: living beyond your means, financial difficulties, close association with a vendor or a customer, excessive control issues, behavioral changes, or a wheeler-dealer type attitude. So living beyond your means, doing things that are consistent with their known income, financial difficulties. I can't stress that in this economy currently. Gas this morning, I think I paid $4.10 a gallon. National Grid is on their second increase this month. Your employees are going to be feeling it. My daughter's rent in the last 5 years doubled from $1,000 to $2,000, right? Her salary has not gone up that much, right? And this is happening with all your employees. So there's going to be financial difficulties. So now let's talk about QuickBooks specifically. So here are some various types of fraud in QuickBooks that over the last 2 to 3 years we've seen probably an uptick in. One of the big ones is vendor fraud. The other is happening is payroll fraud. We just had one recently where one of our clients had terminated an employee. The person in charge of payroll had full control. They continued to pay that employee, but keep the check and cash the check personally. And the only way it was uncovered was when the W-2s were just recently issued. That employee who was terminated called to complain why their W-2 income was so high. Bank rec fraud, and then accounts receivable fraud. And there's other various, but those are probably the 4 of the biggest ones. So vendor fraud, big one. Vendor fraud involving phony vendors. Studies indicate companies lose 5%. Let me say it again, 5% of your revenue due to vendor fraud. 46% of reported fraud cases involve imposter scams, which likely include fraudulent activities related to fake vendors. So just take your annual revenue. If you had $1 million and you had a vendor fraud, you could expect to have an average of $50,000 embezzled. And I can tell you, it's dramatically more than that. So that's what at least the studies are showing overall. But in my cases, they're running between, I don't know, 150 to 600,000. So vendor fraud, you're going to go through this more in QuickBooks, but duplicate vendors. So QuickBooks does have some security features but they're only going to recognize vendors if the information is exactly the same. So you want to just point this out, Christine?
Yep. So in this example, we're showing that if you type a vendor's name in without the comma, it's going to view it as one specific vendor. So we have Dannible and McKee LLP without the comma. And then you could type another vendor in, Dannible and McKee with the comma, LLP, and it's going to not recognize that it's a duplicate vendor. And there's no space next to the comma. So you could even put a third one in there, comma, space, LLP, and there you have a third vendor. So typically what could happen is you could have an employee who's writing checks to Dannible and McKee without the comma, and that's really coming to, us as the accounting firm, but then they're writing it to the one with the comma and then changing it to themselves. But when you go and run a report, you'd see the two vendors. So just something really to keep an eye on. It's kind of, in my opinion, a little bit of a flaw with QuickBooks because that there right there is where you could easily commit fraud as an employee.
And we'll talk about vendor setups too as we go along, because that's going to be a key piece for really good internal controls, good segregation of duties as well. So fictitious vendors, adding new vendors without approval or credit check. Again, this is something we're going to talk about when we get to the QuickBooks piece specifically. You do not want to have your AP manager or the person responsible with inputting payables or writing checks able to add vendors. It's a bad situation. And even in small companies, you really got to figure out how to put controls in place to prevent that. Fictitious vendors is a huge, huge thing. Again, just in central New York, we're seeing in the hundreds of thousands of dollars, and some of the cases that, if we have time, we'll get to at the end, are running between $6 and $10 million over the course before they're uncovered. So this is a big piece. Payroll fraud. Again, I just gave you an example of one that just recently happened to a client. So payroll is often recorded via journal entries. They obviously should agree to the payroll register. There should be no other entries within the payroll ledger. An employee with access to the bank could easily be withdrawing cash and recording in QuickBooks via journal entries as wages. The other thing we recommend is, using an outside payroll company like ADP, Paychex, any of those, Paylocity. If you do it internally, again, making sure you have the right setups. Who has access to that payroll module? Who can add a new employee? It's super simple to add, your relative in there and start running payroll checks for them. If I've been the controller of a company for 18 years, the owners trust me. I know they've never looked at the payroll reports that I run each week. They don't have time. They're running a business. I know I can easily add a fictitious employee and start paying them and then cashing the checks myself. So it's, again, making sure you have the right controls in place and not overly trusting people, getting the controls, keeping the controls, and making sure you follow them.
Just really quick, we had someone comment, in case some of you can't see it, but someone is saying in the chat that the city of Glens Falls had a fake vendor scheme and lost $2 million.
Yeah, it's becoming dramatic. We had a client it was 12 years ago who had a fictitious vendor that got hit for about $6 million. The fraud was so prevalent and for such small amounts that ultimately the company started incorporating that into their annual budget, just because the checks were happening. And the way they got caught is the person ended up getting sick and was out. A check got cut for that vendor, and the payables clerk said, no, so-and-so always hand delivers the payment to them. And the owner was like, well, that's not a good thing. And when they looked into it, found out that this had been going on for, 3 or 4 years. So again, big issue. It's been going on forever, but it's a big number. Bank reconciliations. Again, the people who are having access to the banks should not be able to do the bank reconciliations, who can write checks, who can make deposits, because it's super simple to go in and alter a bank rec. If you have a deposit that potentially had $2,000 in cash, your accounts receivable clerk posted it into QuickBooks with the right deposit, and then you take the deposit to the bank, you pocket the cash, and then later on you go in and you manipulate the deposit after the fact, or you do a journal entry after the fact to get rid of that $2,000, nobody's going to know the difference. So you want to make sure the person doing the bank rec is not the person taking the deposits to the bank. It's not the AR manager. So you want to make sure you have good, again, segregation of duties. Falsifying records to hide. Cash or check payments. We sort of just talked about this. Typically received from customers. They have to be applied against open invoices. Payments should then be deposited into the bank. Support from the deposit should be maintained. An AR clerk could be skimming cash payments, sort of what we just talked about. The other good control that you could put into place is the person who's calling on overaged receivables is not the same person who is collecting the checks or the AR person directly there. So if you have a customer and I call one of my clients and say, hey, you have a $3,000 bill, and they tell me, hey, I wrote a check last month, you guys cashed it, that's gonna, then identify that something else could be going on. Poll 2, do you feel that you have proper, good internal controls in place? No right answer. While you are answering, well, I just want to talk a little bit about it. So again, having good internal controls, we see it all the time. We have bank recs that are being done. Bank statements back in the day were being mailed to the owner's house. Bank recs would be done by somebody in a different department. Owners would initial the bottom of the bank statement. So if that was your written procedure out that happened, that would be great. However, what we find in practice is that that's not typically what happens. So people get busy and good controls aren't typically always followed. So internal controls, it's just a system of policies, procedures, and measures to achieve objectives, safeguard your assets, ensure accurate financial reporting. So just think of internal controls as a set of rules put in place by your company or organization to ensure things run smoothly and correctly. Separation of duties, again, we've sort of kept hitting on this, but it's really an internal control principle where key tasks and responsibilities are divided among individuals or departments to prevent fraud, errors, or the abuse of authority. I cannot stress this enough. You have to have good separation of duties. We do it in our firm. I'm the person who's responsible for our general ledger. Our CFO is responsible for all of our banking, signing of the checks. ACH authority, he has no access to our general ledger. I have no access to the banks. It's a great separation of duties. And you have to look at each of your main things: payroll, disbursements, receivables. Those are all good ways to make sure that you have good separation of duties. You got to make sure no single person has control over all aspects of a critical process. So do that. Types of internal controls, cash disbursements, credit cards is becoming a big one, the reconciliation process, and then policies and procedures. So internal controls over cash, petty cash, limit the use of petty cash, use a safe or locked drawer, keep a log, who took the cash, the amount, and always require a receipt. Deposits, use a safe or locked drawer to store checks and cash for deposit until the deposit is being prepared. Restrict the number of employees who have access to the key code. Do not have the same person prepare and deposit and take it to the bank. Prepare documentation of the deposit for records. And I can't even make this up. Yesterday, I was at a client who found an envelope in their filing cabinet, actually an employee did, that had $13,000 in cash and $8,000 in checks from 2 years ago that they didn't even know was missing. And luckily, the employee was honest, or the employee could have just pocketed that money. So again, good internal controls. When that money comes in, what's the control procedure to make sure that money gets recorded and gets to the bank? Disbursements, same thing, use a safe or locked drawer, require supporting documentation. Do not allow the person preparing the checks to sign them. Here's a good one, require 2 signatures, but no, your bank will still cash it with 1 signature. Only 1 signature is required on a check. 2 signatures are a good internal control procedure, so if you're scanning checks, you can easily look to make sure 2 signatures are on there. That's only for an internal control procedure. Use positive pay. If you're not using positive pay yet, make sure you get that set up with your bank. That helps with making sure that people aren't ACHing money out. Our personal checking account in our firm has been hit twice in the last 6 months, but it's been caught because we use positive pay. So we've had to close the accounts and create new accounts. So if you're not using positive pay, you're not sure what it is, reach out to us. We'll be more than happy to assist you with that or reach out to your bankers. ACH payments require supporting documentation. Person preparing to authorize the ACH, positive pay we just talked about, and then set up procedures to use outside of the organization. So it's not been as prevalent, but it still is with scammers from all over the world. Taking over really your email account, contacting your AP clerk, sending an email like they're the owner of the company saying, you need to wire right away $500,000 for this insurance payment to this bank. I have a deal closing. And the AP clerk wants to do a good job for the owner, obviously. So they go ahead and they set up the wire and they send the money. As soon as they send it, that money's gone typically. So you want to set up procedures that can't happen, that your payables manager cannot just send out an ACH without a second person going in and approving it. Or that you don't approve things through email, that you do it through text message only, or you do it by voice phone calls, just to make sure in case someone does compromise your email, there's a way to get around it. Cash withdrawals, limit cash withdrawals from the bank. Cash withdrawals are necessary. Make sure the employee has authorization, apply a threshold, and require supporting documentation. One of our latest frauds involved that directly, where the person was doing cash withdrawals multiple times from different branches a week. Credit cards, can't stress this enough. Limit the use, make sure you're making sure they're not charging personal items. You should always have account limits set for every single credit card. Verify all the charges and require receipts. If they don't provide receipts, they need to reimburse the company for that charge. Reconciliations, reconcile the bank and credit cards monthly. I'm a big fan of reconciling your bank, especially in QuickBooks. It's super simple. Daily. If you don't have a ton of transactions going through, which most small businesses don't, it takes no time to go into your bank, bring up your statement, bring up QuickBooks, do your reconciliation. It's a great procedure. Fiscal policies and procedures should obviously be in writing. Make sure everybody knows what your policies and procedures are regarding all of those. Expense reimbursements is a big one, journal entries, payroll, investments. And now we're going to get to the heart, hopefully, of the seminar here is how we're going to prevent fraud in QuickBooks. How we're going to set up user roles, closing the books, attaching documentation into QuickBooks, and then my favorite is utilizing the audit log. Back to you.
Okay. So the first, and other than the audit log, probably the most important one is going to be setting up users and assigning their roles in your QuickBooks account. So if some of you on this call don't think you have that already, I highly encourage you to go and take a look at that and make sure that each person that has access to your QuickBooks is set up as their own user. I'm going to go over some of the different options that are already set up in QuickBooks, but you can also create a custom user. So if some of these that I go over today, if you don't think that they fit what you need for one of your employees, there is an option to do a custom role. So when you're in QuickBooks, to get to manage your users, you're going to go to the gear icon on the upper right-hand corner. And then over to the left, you're going to click on Manage Users underneath your company. Then this is going to bring you to the manage users page. You're going to see users up at the top left. And these are little tabs you can click on. Then there's roles. So you'll be able to go in and view these roles after I go over them today. And then the accounting firms tab is if you were going to add somebody like your auditor or your tax accountant, you can add them as a separate type of user. So you're going to click on the little green button that says add user. And then it's going to allow you to put in the person's first name, last name, and their email. And then down at the bottom is where you're going to assign their role. So we're going to go over some of the roles that are the options. The first one is the primary admin. So you won't technically be able to add a new person and give them that role right away. The primary admin is basically the person who essentially like owns the QuickBooks file. They have access to do every single thing in QuickBooks that they would want to, including canceling or reopening it and adding new people. You can assign someone as a company admin. So this role can also see and do everything, including adding users and changing passwords. The only difference is if the company admin tried to call into it, say for some support questions, there are certain things that they wouldn't be allowed to do because they would need access from the primary admin. And then we have a standard all access. Users to this role are typically accountant users and have full access without admin privileges. So they would not be able to go in and delete or add people or anything like that.
And that's sort of where we're seeing where most of our clients are adding users. Inaccurately, I might add.
All right. So then we have for the expense side, you can have a bill clerk. So this user can add bills and mark bills as paid, but cannot approve or pay the bills. A bill payer, they can view and pay bills and edit the vendor info, but they cannot add bills or complete any other actions with bills. A bill approver can only approve the bills. They cannot pay or modify them. And then the expense manager can have access to all expense transactions, vendors, products and services, sales tax, and currencies. So as Sean was mentioning earlier with the separation of duties, if you have multiple people in your billing department, take a close look at these different options so that there's some people who can add a bill, but then they can't change it, or they can't add a bill, but they can go in and approve it. So this is important with making sure you have those separation of duties.
Yeah, make sure your bill clerk does not have access to adding a new vendor. Leave that up to the owner, the controller, or whoever's in charge of the accounting department.
Okay, so then a couple other options are the accounts payable manager. So this role can see and do everything with expenses, bills, vendors, and AP reports. An accounts receivable manager, they can see and do everything with sales, customers, invoices, and accounts receivable reports. Then you have an in-house accountant, and they can access reports, bookkeeping, and accounting tools, but they have no access to payroll, and they cannot manage users. And then you have a bookkeeper option, and they can access all bookkeeping transactions and tools, and there's no access to financial reports, payroll, time, or budgets. So there's definitely a lot of different options for you to kind of pick and choose who you want to have access to what.
And so what happens if the primary administrative leaves the organization? I had a question.
So it's a little bit more difficult with nonprofit organizations from my experience. So in those cases, I usually recommend to clients that you should use an email that's specific to the company or the organization. So maybe it's finance at, whatever your organization is, .com, or executive director, not like Sean Dotton at dmcpas.com. It should be something that's accessible to other people so that whoever's taking over for that person still can have access to the account. If you don't have access to the account, there is a way to still switch the primary admin user through into it. It's just a little bit daunting and time consuming with paperwork.
Which is good. It's a good
Yeah.
security feature.
Yeah. All right, so some of the advantages of assigning user roles. It creates security with individuals having their own login credentials. So this is huge. I see in a lot of areas that people share logins, and that's not a good idea. Creates a lot of room for fraud. And as we get more into the audit log, you'll see even more of an advantage of why you would like to have people have their own logins, because you can track who's doing what. You can see exactly who it is and what they did. So it ensures users only have access to the resources they need to perform their job, minimizing the risk of unauthorized access, and the user activity is traceable, which we'll get into more detail with that later.
And before you leave the screen, the never share login credentials, I know it happens in small companies all the time. One of the examples or the fraud case that we had were for the $8 million was they had really good internal controls, small department, 3 or 4 people. They were sharing their logins, which allowed this one person to go in and create and write checks. So that's why we talk about never sharing logins. You could have great internal controls, but if they're not being followed, you're just opening yourself up. Sorry.
Oh, okay. All right, so the next thing we're gonna talk about is closing the books. So you can access this by going to the upper right-hand corner when you're logged into QuickBooks and click on the gear icon. Under your company, you're gonna click on Account and Settings. And then all the way down at the bottom, you're gonna click on Advanced. And then you're gonna see an area that shows what your fiscal year is, if you're on cash or accrual basis, and a little section that says Close the Books. So this is super important. If you're handing off your books to someone to do the return or an audit or a review, I encourage you to use this close the books feature. And some of my clients even use it on a monthly basis. So once they close out the month, they go to this close the books feature. They change the date to, maybe it's November, so November 30th. I also encourage using the option to enter a password. There is one that says it'll just warn you and you don't need a password. I never encourage that because when you're in a rush, it's very quick to just click, okay, yeah, keep going. And then someone has changed something in a prior period that you've already closed out. So really, really encourage you to use the password. And I encourage you not to share it with everybody on your team. Choose wisely who you share the password with.
And again, as an example, yesterday I was posting journal entries on a client that Christine oversees for me. I used 3/25/25 as the date, and I make her use passwords on my clients, and it warned me or I would have posted it into the wrong year. But from a fraud standpoint as well, it's a super easy way to conceal fraud. If you're stealing money, you would just backdate it to a previous year. It's going to take people forever to figure out where that is.
All right, we're on to our third polling question. How do you maintain your supporting documentation? Do you use hard copies only, electronic copies only, hard copies and electronic copies, or maybe you don't save them at all? All right, you got 10 more seconds.
Interesting.
Oh, well, I'm really happy to see 0% said we don't save them. All right, and hard copies and electronic copies. All right, that was the most popular one. All right, so now we're going to talk about attaching your documentation in QuickBooks. So there's 2 ways that we can do this. The first way is if some of you have your banking activity physically linked to QuickBooks. So that means your transactions from the bank and credit cards are pulling into QuickBooks. It could be every 4 hours. It's at least typically every day that you log in and see that new activity. So right from that section, you can categorize your transaction and then click Add Attachment. And this will open your files on your computer to upload the receipt. And then you can see right down there the file name. So this is a Lowe's receipt. And then it'll save when you post this transaction to your general ledger. When an expense or deposit transaction, there's the option to attach documentation to the bottom left. So in this instance, let's say you go through the transaction module and you forget to attach the document. That's okay. You could go to the vendor, click on the expense, and open that up and then drag and drop the attachment right there, or click on Add Attachment and it'll bring you to the spot on your computer where you can add it from there. And then all you do is hit Save and Close.
And it saves a lot of time. What I was doing yesterday was quarterly sales tax. I was able to just attach the quarterly return right into there. So if you're ever looking for that, or you're looking for an invoice, I mean, you just go right to the transaction, you can pull it up, it saves so much time.
Okay, so as Sean said, some advantages of attaching documentation. It provides a clear and verifiable picture of the transaction, demonstrates the legitimacy of the financial entries, ensures the organization's relevant documents are organized and readily accessible, and it simplifies the audit process, which is huge, especially in today's day where you're letting your accountant access the QuickBooks instead of them bothering you, asking you to scan all this stuff in. If you're already ahead of the game and you've got it attached into your file, they can view it, ask any questions. I really like it because when we're reviewing clients' files, you know, I might see something and I'm kind of wondering exactly what it is. And when the client attaches it, I can just open it. I can see the invoice. I see exactly what it's for. And then I know that it's coded properly, you know, or I can have the discussion that I think it, you know, could be changed how it's coded. So attaching the documents is really beneficial. Oops. Okay, skip that. Oh, okay. All right, so now we're going to do some key reports to detect fraud in QuickBooks. So we're going to go over the accounts receivable aging detail report, accounts payable, the check detail report, the deposit detail report, journal entries, and then our favorite is the audit log. So how to access these key reports in QuickBooks. On the left-hand navigation bar, you're going to select reports and standard reports. And then once you're in the standard reports, there are a bunch of different sections in there, and it's kind of categorized by like the different feature you're looking for. So it might be who owes you, or who you owe, or for my accountant. So you can scroll through and see all the different options of reports, but you can also type right in the little box at the top, and then you can see the drop down to choose the one that you'd like. So our accounts receivable aging detail report is really important. It shows your outstanding invoices to date, open balances on the invoices, and any improperly applied payments. So Sean had mentioned earlier that this could be an area where fraud is trying to be hidden. So when you're reviewing this report every month and you see this detail on there, you could see something that's really, really old and question that. And maybe it's not really old, maybe it's fraud. So this is what it's going to look like. So you can see all the details of 31 to 60 days. If it's current, there's an over 90-day section if you have some of that. You've got the invoice number, the customer it's for, the date, and then you'll see the amount. And if they did make a payment, the open balance would show a different amount. So reviewing this on a regular basis is really important because you really don't want to see anything that's extremely old on this report. And you don't want to see anything other than an invoice or maybe a payment. If they overpaid, you'd have that showing up there, but you don't want to see other types of things like journal entries or anything posted on this report. Similar to accounts receivable, we have our accounts payable aging detail report, and this provides outstanding bills to date and improperly applied bill payments. So the reports look pretty similar. So you can see if it's, 1 to 30 days, if it's over 90, if it's current, the bill, the vendor, when it's due, how many days it's past due, and the amount. And similar to the accounts receivable, you only want to see bills on here in that transaction type column, or maybe a payment, because maybe you overpaid the bill, or a vendor credit might be in there because you haven't utilized it yet. But kind of a red flag if you see anything other than those transaction types in there. You don't want to see journal entries. Okay. We have a question. If the client purchased QuickBooks from a reseller, which it no longer uses, but it has them set up as a user, can the reseller be removed as a user without jeopardizing this?
Preferential rate, yeah.
I don't know if you're referring to how the accountants can have set the QuickBooks up. If you are, yes, they have to transfer the billing back to you. And then all you have to do is click on the link and re-upload a payment. And then you have access to that.
But you probably are not going to get the preferential rate.
No. So signing up through your accountant gives you the 30% discount. So if you're paying for it yourself, you would not get that discount. If that didn't answer your question, please feel free to reach out to me and I'll get back to you. All right, so now we're on to the check detail report. So this provides the vendor name, check number, the date the check was written, and whether the check has cleared the bank or not. That's really important. So we've got the dates, if it was a bill payment, an expense, a check, who it was written to, paid to, and then right there under the cleared column, you can see if it's uncleared, and if you had completed a bank rec and it did clear the bank, that would show as cleared. So just another really helpful report to kind of regularly get your eyes on and see who's being paid and if it's cleared or not cleared, on top of also making sure you're paying attention to your bank recs as well.
So before you go to that, can we, for 2 seconds, just talk about if the payables clerk is writing a check and they wrote a check out to myself, for example, and then they go back into QuickBooks and changed it to Hicks Hardware, how would you? You're not going to be able to tell, right?
No, you're not going to be able to tell that on the check detail report.
So that's why the person who is writing the check should never be the person signing the check. So it's definitely a flaw in QuickBooks. So you can go back and change the payee name.
Yes, especially if you're not utilizing the close the books feature. If you were, then the person could not go back and change it, depending on the period and when it was closed. But yes, if it's not closed, anybody can go in and change the vendor name. All right, so then we have our deposit detail report. So similar to the checks, you're going to see the date of the deposit, the customer's applied payments, amount of total deposit, and whether it has cleared the bank or not. Here's the report. Same as the check, the dates, if it was a payment, a sales receipt, or a regular deposit, who the customer was, and over to the right if it's cleared or uncleared. The journal entry report is also really helpful. You're going to see the date of the journal entry, the general ledger account it was posted to, a description if someone put a description in there, and the amount. So each line item of the journal entry and the total amount of the journal entry will be shown on this report. And here's an example. So the first one, journal entry 146, you can see that it was for prepaid insurance, and you've got your debits and your credits. So we're debiting insurance, workers' comp, and then crediting prepaid expenses. We have our last polling question. Do you use the audit log feature in QuickBooks?
2 years ago, I was C.
Really?
Yeah, but you said me. Yeah, we use this all the time in our forensic exams now. And again, with the uptick in the QuickBooks fraud that we've seen, it's really been insane. I would bet you 96% of our frauds over the last 18 months have all been QuickBooks related. It's just, the organizations are smaller. It's harder to set up good internal controls and segregation of duties. So this is what's, going on.
All right. Only 11% hadn't heard of it. That's not bad.
Yeah. I'm surprised so many people have.
All right. So the audit log is going to show you the date of the original transaction. So that's kind of the big key thing in this report, the original transaction. It's going to have the timestamp of the original transaction, the user that completed the task, and the date and timestamp of the edited transaction. So when you run the audit log, you're going to have a lot of different filters that you can use to kind of figure out what it is you're trying to find. So you can run it for all users, any time period, and any type of transaction type that they did, or you could kind of close in on a specific thing. So you could choose a specific employee, you can choose a specific day or a specific week or month, and then you can choose what it is you think they may have done or what you're trying to find. I really like the deleted and voided transaction one, but you can look at all transactions, anything to do with the budget. But I think the most popular one is the deleted and voided transactions. So once you use your filters, you're going to come to a new page where it looks like this. So you're going to see in order everything on that filter that you chose. So July 18th of 2025 at 4 p.m., Craig Carlson completed a deposit. And if you can see, the word deposit is kind of like a little blue color. So you can click on the deposit word and it'll bring you directly to the physical deposit, just as if you were clicking on it in your general ledger on a different page. Or you can click the view button over to the right, and that's where it's going to show you the actual audit log history of what happened. So you'll be able to see that the original transaction was on June 16th down at the bottom at 9:04 a.m. It was added by Chelsea. And then each little section after that is every other item that happened to that transaction. And if something was changed, when you click on the actual event, you're going to see over to the right. So it was originally coded to fundraising expenses, but then it was changed to program expense supplies. So that little icon is going to show you like this account was crossed out because they changed it, and then the green is showing you the new one.
Yeah, and again, from a fraud standpoint, we're going to be able to see if checks are being changed on the names. We're going to be able to see who the user is. Again, if fraud is happening in your organization or company, this becomes really crucial when we get to prosecutions, because we do have the person's name. If you have a history of sharing logins, you really lose that piece, which is dramatic in a prosecution case.
All right, so some advantages to using the audit log is it detects and prevents fraud. Reviewing it helps identify unusual or suspicious activities that may indicate fraudulent behavior. It improves accountability. So the audit log allows team members to see who made changes, ensuring accountability and compliance with procedures. It ensures data accuracy by tracking all changes. The audit log helps confirm the accuracy of financial data, preventing human error. It resolves issues quickly. So the audit log allows for quick tracing of user actions, helping to identify the source of problems and resolve them efficiently. And it maintains transparency. The audit log provides transparency into users' activities, enhancing accountability and trust within the organization. Just wanted to comment on the resolves issues quickly. My department, we see that a lot, and it's super helpful because sometimes you click on something by accident and then something's off and you're able to go check that audit log and correct it. And I just recently helped one of our audit partners. He had pulled a trial balance to do a review and then realized after the fact that some of the numbers were different. And I was able to go into the audit log and give him a complete list of all the things that had been changed after he had taken the trial balance. So the audit log is really, really great, and we encourage you to use it if you haven't already.
All right, so the last part, while time allows, we'll go through some real world examples. Unfortunately, this was not one from our firm, but I thought it was really important just to show you what a vendor fraud looks like. We touched on it. So typically these frauds last for a while. This one lasted for 4 years and 3 months. It started with this gentleman's wife becoming pregnant. His salary was $80,000 a year. And due to financial pressures, he was not being able to cover his monthly bills, his student loans, mortgage, credit card, and a new baby. It's insane, right? He worked for a very large company. However, his division only had a controller, an assistant controller, an accounting manager, which he was, and 3 employees under him. Due to the small size of the department, employees would often share login passwords. Just because somebody was sick on vacation, they all shared the passwords. So no one in the system realized that they had given another employee approval for checks and ACHs up to $250,000, and the perpetrator discovered that by accident just randomly one day. He started to think, if I could just get my debt paid off, I'd be doing okay, and then I could stop. Hear it all the time, by the way. Started with very small payments to his credit card company for $1,100. He went into his coworker's computer on a Friday evening, requested the check to Universal, which is a company they did business frequently with, but also the same name as his credit card company. Nobody's going to notice that when they're scanning an audit log. They're all Universal. So he was able to start doing that. Guilt started to sink into him. He thought he could go to jail for only $1,100, so he decided to try it again 2 weeks later for $1,800, and it worked. Nobody caught it. These are all small amounts that people probably wouldn't have caught had he just stopped. After almost having it all paid off, a check for $4,500 was never applied to his statement. He started to freak out and get nervous, He forgot to write the credit card number on the check. The check was returned to a different office in Atlanta, Georgia, who didn't look into it. Instead, they sent it back to him because he was the one who wrote the check. The panic made him immediately stop with the check fraud. So he stopped for about a year and then decided to create a company, again, access to vendor files, creating a fictitious company, and he added them to the accounts payable system. Started with small checks, only requesting a $27,000 check. We say small, but in the scheme of $8 million, that's small, I guess. He went onto his coworker's computer with their login, posted the payable, went back to his computer and approved the payment, right? Good separation of duties. Somebody approved it. He wrote the check. It's the same person though, because they had the same login information. He would request the checks the night before, and then he knew he'd be getting the checks the next day. This went on for 3 more years. The first year he embezzled $1 million, year 2, $2 million, and year 3, $4 million. The year he was caught, another $1 million for a total of $8 million. And it was just off the cuff. His boss was friends with now his ex-wife. They had lunch. They were just talking, and his ex-wife happened to mention, geez, I don't know how he's able to afford the stuff he does. And it got his boss starting to think. So his boss went back and started to look into this. And that's ultimately how he got caught. So again, 4.5 years this went on, fictitious vendor and multiple users. So multiple fails in the internal control and segregation of duties. Another one we talked about that was, this was the cash withdrawal, where the person would go into a local bank and they would do multiple cash withdrawals, telling the people they were trying to cover payroll. Ultimately, they were just utilizing this cash to help fund their lifestyle, and ultimately just pled guilty very recently. Another payroll fraud. I know we're running out of time, so I'm just trying to go quick. Same thing, started out small, just started continuing with more and more. Ultimately over $600,000 over, was a little under 3 years. So we do have a YouTube page where our past seminars are on. We highly recommend you guys take a look at that, like, subscribe to that. We did a little bit longer of this presentation back in the fall. So if you want to have a little bit more information, feel free to look at those 2 parts of our fraud seminars. There's some other fraud information out there as well as other good seminars. If there's no other questions, I think we will be ending. If you do have questions, please reach out to us. Our contact information is in there. You will all be getting these presentations emailed to you at the end of this. We'll be more than happy to answer any questions that you have later on. Feel free to reach out to us. Thank you guys for your time. We really appreciate it. We hope you have a great day.